Hello guys, welcome again to another BTC update. I hope you're doing great today. Today we have a nice, very quick update for you guys regarding Bitcoin daily, basically. So yeah, let's get started. Obviously, like, share, subscribe to the channel so I can keep doing these for you. So yeah, let's start. So as you can see in front of you, I've been tracking BTC on the 4-hour time frame and also on the daily time frame using Elliot wave formation. Now, I do want to point out some things and I do want to talk about some things. So please stick around till the end of the video because it's going to get very, very informational for all of you. With that said, one thing to note is, which I want to point out, is just me giving you some free knowledge out there regarding trading, right? I've been talking about this forever, since this range right here, and even at 40, even at 60, and I even have it pinned on my Twitter. Market makers usually go for both. They go for bulls and bears. They go for bull liquidations and bear liquidations, no matter what. They don't discriminate, basically. And how they do that is by basically placing a strong area and making them believe that this is either support or resistance, and then that area basically just breaks on the third attempt, on the second attempt. That's one of my, so for example, just before I tell you my reason, but for example here, right, we had resistance, right? You shorted, you made money. Resistance, you shorted, you made money. Resistance, you shorted, you made money. And then you went again, and obviously you want to short again here, especially the beginner traders who have no idea about how to use indicators or volume or anything like that. So you went here again, and then you're like, okay, I'm gonna short again, which is natural. It's not, you are shorting at resistance, but you're gonna get stopped out, basically. And if you don't put a stop loss, you're gonna get liquidated. And that's what market makers do. They go for the liquidations. And another thing that they did here, which is very, very interesting in my opinion, I'm gonna go to the 1-hour time frame to just show you. I think it was here, right? Yeah, here. I think so. So what happened here, as you could see, is that you had a strong pump to the upside, right? And then basically people started to long here, and then bam, drop happened. So these are newbie traders obviously getting caught here, and obviously people started to short again over this area, and then market kept going and going and going, and now the opposite is happening on micro time frames. People start to long here, and then drop happens. So this is the market maker game. It's always going to be like that forever. They're always going to try to do the opposite of what you think is going to happen. The same thing could be said about the lows. So you could say, oh, we're going to drop, hold it as support, and then finally it's going to break. But obviously that's where the indicators come in and help us. And that's one of my main reasons of why I think if BTC goes to 30 again or taps that 30 low region, 30 is not going to hold. So it's not going to hold at least on the second, third tap. So you go there, something similar to this, basically, where you hold, you tap it, you tap it, you tap it, and then you tap it one more time, and you get basically liquidated after or stopped out. So just be careful because this is their game, and now we are in an uptrend. So now they're going for those short liquidations. People are gonna short all the way up, and this is gonna keep pumping all the way up till finally it reverses, and then the opposite's gonna happen where people are gonna start longing, and then the market's gonna drop, and so on and so forth. The cycle never ends. So with that said, we're going to go to Elliott wave formation that I see here. Now, one thing to point out is that I'm not really an Elliott wave trader. I have my own strategy which I trade with. I usually use Elliott waves to try to validate my strategy, to validate my trades, to validate my analysis. I am trying my best to master it right now. I have a book which I do recommend a lot of people to read it. It's called Elliott Wave Principle by Frost and Precher. Very, very good book. So I'm actually studying from this book right now, and it's helping me out because I'm getting better and better at analyzing these Elliott waves. So as you can see, I have a 1, 2, 3, 4, 5. And then an ABC correction. Now, obviously, these can change. I'm just basing this on the rules and guidelines of the Fibonacci retracement of Elliott waves. But if you go to the daily time frame, they look even better. So on the daily, actually, you can see the wave pretty good, playing out pretty well. I'm gonna show you here. As you can see here, you started your wave 1 around 37,400, and then you had your 1, 2, 3, 4, 5. So this is a micro or a sub wave right here. So I can show you this. So you had your 1, 2, 3, 4, 5, and then you had your 2 correction. So you have now your 1 and then your 2. And then this wave 3 actually is also compromised of 1, 2, 3, 4, 5. And then after this wave 3 is reached, well, obviously, which was around 48,300, which is near our 0.382 level here, we retraced, obviously, or we will retrace. Now, the problem with the retrace is two things. Usually wave 4 and wave 2 are opposite to each other. By that I mean wave 2 right here was a strong decline. So you can see here 1-2 days of drop and then another pump. So most likely wave 4 is going to be the opposite of wave 2, which means it will probably take a longer time to correct. Now, another thing to note is for wave 2, if you take your Fibonacci retracements, right, you could see here that wave 2, which actually is the strongest, most like a severe correction in the Elliott wave formations, because they can go up to 80% or even 90% retracement, actually went to the 0.382. So it was actually a relatively weak retracement. So if we apply the rules of Elliott, which say basically that 2 and 4 are kind of opposite to each other, then that would tell us that 4 might be stronger than that retracement. Now, stronger doesn't mean the end of the world. Actually, it should be stronger because it should be a healthy correction. I'm going to pull up my retracement, Fibs retracement right here and just show you where we wicked at. So we actually wicked at the 0.236, which also was a previous resistance trend line. I'm going to go to the 6 hour just to show you. It looks even better on the 6 hour. So you can see resistance, 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 break, flip to support. And that's what we really want to see. We really want to see a break and a flip to support and then a move to the upside. So logically speaking, if this is the case, if this is truly the case where you break, hold a support, then in the next couple of days, we're going to see 48.2 being broken and we're going to head over to 50, 51K. If that's not the case, and if the Elliott wave principles are going to play out 100%, which again, it's not mandatory, but most of the time that's how it is, right? Then the likelihood of this retracement to be slightly stronger is going to be there. And what might happen is we might have some type of a double top scenario. So something like this, and then we retrace, and then we move up. Or we can have another drop again and consolidate here and then move up. Now, keep in mind, we need to form some type of, wedge formation, triangle formation, flat formation to, validate this wave 4 as well, to give it more confluence as well. But yeah, where might the stronger correction head to if this is really a wave 4 retracement, which I think it is. So I'm going to pull up my my fibs, just to show you here from the bottom of wave 2. Let's reverse this. So you have two levels, which are the 0.382, which is the most likely level to be hit, by the way. Again, wave 4, this is where it usually retraces. It's not that strong of a retrace, which is around 45,406, which is great, which is within the realm of Elliott. And there's another one, which is the 0.5, which is even better, because if BTC goes for a retracement to the 0.5, this just makes perfect sense. In what way? One, obviously, I don't think it's going to go like exactly here, probably around this area, but I'm just going to keep it here. So that just makes perfect sense, because one, you're going to previous resistance now flipping to support, which should happen, logically speaking, because if you look left, you could see that all of this area was support. So it needs to be reflipped into resistance. That's number one. It needs to be flipped into this. All of this area was resistance. It needs to be flipped into support. So that's number one. Number two, going to the 0.5 area, so between 0.5 and 0.382, will validate the Elliott wave principle guidelines, which basically say if wave 2 is severe and short, then wave 4 is going to be less severe and longer in time, and so on and so forth. Right? So since wave 1 was wave 2, was a steep decline, but it was very short and not very strong, then most likely wave 4 is going to take longer time, and it's not going to be a steep decline, obviously, and it's going to retrace more than 2. That's number 2, basically. That's the Elliott wave principle guidelines. So that's number 2. Number 3, going here actually makes also perfect sense, because if you go to the daily, by the way, the daily time frame, and you pop up your daily EMAs, I'm gonna show you my 18 and 30 EMA. My 18 and 30 EMA currently are sitting around 43,800 and 42,700. So if we apply all of what I've been talking about, especially regarding the Elliott wave. So basically, wave 4 needs to be deeper correction than wave 2 because wave 2 was not a deep correction, and wave 4 needs to take longer to play out because wave 2 played out fast basically, and since wave 4 will probably take longer time since wave 2 took a short period of time to progress, then and you have now your EMAs, which are the 18 and 30, coming in around this level. So this just makes perfect sense, because if wave 4 is going to take some time to play out, so basically some time means like some type of consolidation here, then a drop. By the time this really drops, these will probably be here already. So the EMAs, the 18 and 30, will probably be around the 0.5 and the 0.382, which will perfect because you can see where we bounce. We bounce all the time along these EMAs. So that's where your bounce will come in, and that's where you basically start to head up. Now, obviously, this is not necessary. It's not mandatory, but it is the perfect scenario, in my opinion, the most healthy scenario. I think the direction is still here, at least in the meantime. 5, by the way, could be an extended 5. So if this is an extended 5, you could go all the way up to this level, okay, which is the 0.618, I think, if I'm not mistaken. Yeah, so we could go to the 0.618, but granted we break the 0.5 area. And if that happens, then obviously that oh, I deleted my. So obviously if that happens and we go to the 0.618, then obviously ABC will change. The ABC correction will obviously change. Now, keep in mind that this ABC, in my opinion, is, I took it, it should be stronger. I mean, if you have your 1, 2, 3, 4, 5, this is a very small ABC, but this is the ABC I placed in case we're going to go to this area. If we don't go to this area, then the ABC obviously is going to be stronger. So you probably have a stronger drop than 50 to 48, probably like around this area to 47. So that's your A, and then your B, and then your C will be something like that. Okay? But if your C turns out to be something like this, as I'm showing you something similar to this, then most likely we will continue heading up to the 0.618. And that's what I'm seeing right now. Obviously, I need more information, more data to validate the scenario. It's not very easy to track Elliott formations. We could very well bounce from here. It looks too perfect and too good to be true, by the way. Obviously, if you start to break above the previous highs, which is 48 to 200, with candle closes above that, so daily candle closes above 48 200, then most likely your 1, 2, 3, 4 has finalized, and we're heading over to our 5. Indicator wise, daily is still bullish, is not bearish. 3-day is bullish, still not bearish. Weekly is bullish, still not bearish. But we are at the point in time that is, be careful. That's what I said to my Discord members, and I'm going to be telling you this as well. The 4-hour time frame has entered into a bearish momentum, I think, and I honestly believe that this will probably just consolidate here or go slightly higher and then drop once again, reach our 0.382 or 0.5 over the next couple of days, and then head towards our 0.5 region, which is the 50-51K region. I do believe so. Obviously, things can change. Data can change. This, what you're seeing right here, is perfect. It's too good to be true. That's what scares me so much. And I mean, look at this. Break, retest the support, and bounce. It just, and even retest the support at the 0.236, and then bounce. So it's too good to be true. It really is too good to be true. Not to mention, not to mention that there's very low volume also on the move up. On the 1-hour time frame, it looks even better, as you can see. There's not a lot of volume. We had a strong spike in volume here, which is around that area, around the bounce, and that's it. Declining volume after. So we gotta be careful, because this could very well likely form a Bart Simpson formation, which is gonna look something like this, and then you drop to the 0.382, and then you start bouncing. I still believe that will be the case. If something changes, I will update you guys, but this is what I see for now. Bull trap is on. My piece of advice, once that bull trap finalizes, I really advise you to at least get out. Like I said earlier, 50, 60% out, 30% in, or capital out, something out. Don't stay in the market after this bull trap finalizes. That's my best advice for you guys. So thank you again for watching the video. I hope you enjoyed it. Like, share, and subscribe so I can make this channel grow, so I can keep posting videos for you. I will have some extra videos coming up very shortly about some altcoins as well. You know, I really want to get this channel started. So if you have any suggestions on altcoins, please leave them in the comment section below. If you want to inquire about my private paid Discord, please message me on my private Telegram, which is also in the description below. Thank you again for watching the video, guys, and I will see you again next time. Bye bye.